So the journal entry to record the payment for merchandise within 10 days when the discount terms are 210 net 30. What does it mean? So you purchased goods worth of 1000 and you are given the discount as 210 net 30. This means that if you pay all amount in 10 days, you are liable to have 2% discount. Otherwise, you need to pay this 1000 in maximum 30 days. The net amount that you need to pay in 30 days. So the journal entry is that you avail this 2% discount. Within 10 days, you pay the amount. So 2% of this 1000 is how much? Right? So when we pay, how much cash we paid? Right? We pay cash 980. So our cash decrease or increase? Chloe, Minsu, Arone, Sipade.
Cash decreases, sir.
Right? Our cash is decreased. Right? And what about our accounts payable? Decrease or increase?
Also decrease.
Also decrease. So what will be the entry? Accounts payable decrease, debit. So we start from debit. Accounts payable, and we decreased total. It's 1000 because the total liability was 1000. We pay cash 980. Rest of the thing is the discount. Discount, this is discount, not discount paid, this is discount received. So discount received, in that case, this entry is balanced. Debit is equal to credit. Right? Understand? Sipade, Chloe, Arone?
Yes.
Yes.
Right? So let me just compare these two slides because most of the students, they would be talking about where this 1000 came from. So I'm going to be talking about this same entry. Okay, the entry is like that. We purchased, goods worth of 1000. We made an entry. Our inventory is increased by 1000 and our liability also increased by 1000, right? But we avail discount. We avail discount. So our full liabilities, we are discharged from our full liability. So we need to decrease our full liability. So that 1000 from our previous slide, we need to decrease that. And how much we pay? We pay only the 980. So that would be the reduction in our, that would be, I think, inventory discount, right? Payment for discount period, because our inventory is not decreased, our inventory is the same 1000, but we receive the discount. So that discount will go to the inventory when we talk about net inventory. So 1000 minus all the inventory discount 20. Our inventory total, what's going to be? 980. Net purchases or net inventory, right? So you can also directly, you can write it down inventory, or you can write it down discount as well. I think the more important stuff or more straightforward thing is you write it down the discount. Okay, now let's talk about apply and compare various inventory cost methods. So this is very important, guys. And also from here, we will be testing in our final heavily about the costing methods. So question arises where this 80,000 came from or 980 came from. We'll talk about that. So, so accounting method selected, it affects profit. So we have various methods to calculate the inventory costing. So why we have the various methods? Because those methods, if we select one method, from 2 or 3 methods or 4 methods, it will affect our profit. It will also affect our taxes. Of course, when our profit is huge, our tax is huge. When our profit is lower, our taxes is lower, right? So it also affect our taxes. Plus, it also affect the value of inventory turnover, gross margin, percentage, ratios derived from financial statement. That is for finance. Just for you, for your understanding, if we are having some kind of decision making, because we will be needing some profit, figures. If profit figures are lower, then our ratios are also lower, and then we may lose some kind of valuable decision as well. So it will affect the financial ratios as well, right? So let's talk about this. So what goes into inventory costs? So the cost of any asset such as inventory is the sum of all costs incurred to bring that asset to its intended use, less any discount. So whatever assets we purchase, right? So all the discounts should be less, or all the charges that we additionally pay for that assets to get operational. That would be the cost. If we talk about inventory, so we pay transportation costs that would be added on the inventory. If we receive any discount, we'll less that discount, right? Similarly, so purchase price plus freight in plus any insurance, any taxes, less any return allowance or discount, right? So tax is going to increase the value of the purchases. Freight in going to increase the value of our purchases. The insurance also going to be increasing our purchases, right? So, and return is going to be less purchases or inventory. Allowance also going to be decreasing our value of the inventory or purchases, and also discounts going to be decreasing the value of our inventory or purchases, right? So this is the complete formula of net purchases or net inventory. Okay, here comes the costing method. Number 1 is the specific unit cost method. Number 2, average cost method. Number 3, first in, first out, or FIFO, first in, first out. Number 4, last in, first out, LIFO, last in, first out, right? So company can use any of these methods. Methods can have very different effects on, like I told you, profits, taxes, and cash flows. So let's talk about these methods one by one. So, Arone, are you with us? Chloe, Ajim,
Yes.
Junpyo,
Yes.
Minsu,
Yes.
Sipade, right? Because from here, the real deal starts. Okay, so let's talk about the specific unit method. So specific unit method, it is used for a business with unique inventory. For example, jewelry, some antique furniture, or real estate. So every real estate is different. Every jewelry, unique jewelry is different. Antique furniture is different. Automobile is different, right? So specific unit method is used for these kind of luxury stuff. You can say that it's very easy method. So business cost their inventories at a specific unit of these costs. So this is for use of too expensive units plus this this method is expensive for inventories with common characteristics. So if, for example, if you are making automobiles, only one model, simple model, for example, simple Toyota Corolla model, that's it. So you are making the same, you are not including any variation on only standardized product, then this unit is very expensive. This costing method is very expensive. So this is also called specific identification method, SIM, specific identification method, right? So this method can also be used in hospital industry.